Hi friends, this is Macro Meow. Today I want to talk about where should you be investing now? Do you want to make money in investing? Do you want to know where you should be investing in next decade? Then keep watching. This video could turn out to be very useful for you. So I'm going to share a PowerPoint presentation and we will discuss where we should be investing now. It could be stocks, bonds, gold, or even crypto for the next decade. Recently came across a very interesting article in Barron's.com, and it says the US is scaring off foreign investors. Is it becoming uninvestable? Welcome to America, the uninvestable. Wow, that seems like a strange thing to say because of the fact that US stocks have outperformed the rest of the world by a huge margin over the past decade. This is how the US stock returns versus the rest of the world stock return looks like from 2010 to February 2023. US stocks have returned almost 250%, while the rest of the world has returned a little over 100%. That is almost twice. The return on investment in US stocks is twice that of return on investment from the stocks in the rest of the world. So, but why the Barron's.com says that US is becoming uninvestable? For some international investors, it may be that US is starting to appear uninvestable. But who are the major investors in US? It's primarily the foreign governments and its sovereign wealth funds who buy billions of dollars of worth of US treasuries, stocks, and bonds. Why do foreign governments do this? This is to protect their own currency exchange rate from fluctuations and volatility, and also to park their excess reserves. So, this is how much the foreign and institutional investors pumped money into federal government debt from 2013 to 2022. It grew from almost 5.6 trillion to 7.8 trillion. But then from 2022, it started falling off towards almost a trillion is gone. Why is this happening? What changed in US? Barron says the US and European decision to freeze Russia's dollar assets and limit the access to Russian bank to SWIFT. And the SWIFT is the payment platform, bank payment platform used by almost all banks in the world. So that made holding dollar riskier for any government that might find itself on the opposing side. Any government which is uncomfortable with American sanctions regime is vulnerable to these kind of sudden decisions. Barron also says the last blow, however, came from Switzerland when Credit Suisse Group was rescued and unsecured debt known as AT1 was wiped out while equity holders got something. Because AT1 bonds are senior to equity holders the hierarchy of seniority in the event of liquidation, but a Swiss government just threw the rule book under the bus and they changed it. So, if Western economies no longer treat property rights and rule of law as sacrosanct, why should capital keep flowing? So, where do EM governments and those governments who fear American sanctions and who want to diversify away from US dollar invest? Well, Russia is talking about increasing investment to friendly countries, but there are really no good alternative to USD or Euro, which are as liquid and as safe. Definitely not Chinese yuan or Indian rupee. So where are they investing? Let's find out. Yes, this is gold. 30 years of central bank gold demand. From 1992 until 2008, the global financial crisis, central banks were net sellers of gold from their reserves. However, after the 2009 global financial crisis, the central banks started loading up the gold in tons. They become net buyers. So the emerging economies, including Russia, China, India, and Turkey, accounted for bulk of central bank gold purchases since 2010, that is, since the global financial crisis, when developed market central banks started printing money and they went into negative interest rate regime. Barron also says gold has been a beneficiary. Central banks bought 70 billion or 1,136 metric ton of gold in 2022, according to the World Gold Council. Gold has a great start to the year, with the SPDR Gold Shares Exchange Traded Fund has gained 9.5% so far in 2023. So the question here is, has the gold run its course? Is there any further upside to the gold? That is what we need to find out. So this is a percentage of gold reserves in central bank holdings of selected countries. Most of the developed countries and Western countries hold more than 50% of their holdings in gold reserves, except, of course, for Japan, which is a close ally of US, and they would likely continue to hold large US dollar reserves. But look at the emerging markets, which has been buying gold in tons since 2020 at 2010, their gold reserves are still minuscule of their overall holding. China is holding 3.5%. India is holding 8.09%. Russian Federation, which has been loading up on gold ever since the friction between US and Russia increased, they also still hold about 20%, which is far less than the percentage of holdings by the developed markets. So if these emerging markets decide to further diversify and increase the gold holding, that is going to give a continued sustained gold demand the years to come. Therefore, I think the gold has further to run. And also, there is another point the Barron article talks about. US stocks tend to move in long cycles uh, out and underperformance. The cycle may be shifting away from the US. This is in large part due to the rest of the world lower exposure to technology and tech-related sectors. Because of the low interest rate regime, negative interest rate regime of the past decade, there was easy money flowing in the market, and these organizations with easy money were chasing growth. They did not worry about the immediate performance of those tech unicorns and tech heavyweights such as Microsoft, Google. But the increased interest rate, the higher interest rate regime pushes the investment towards the value stocks. Today, the macro fundamentals are opposite. The Barron's.com says if you are correct that inflation and interest rates will remain higher for longer, international market sector exposure might boost performance of the investment. So where do we invest? What is stocks? What are the instruments where we can make money in next decade? Here is a list where you could invest. Gold, because central banks are loading up tons of it, creating sustained demand. Emerging market stocks, when P ratio moderates from current high valuation, because high interest rates era favors value stocks in countries where growth prospects are better, or even cryptocurrencies. Although cryptos are not value investments, they have recently outperformed during the banking turmoil. They performed well. This could point to some sort of safe haven appeal. Of course, in digital age, usefulness of cryptocurrencies will keep rising. That's all for now. Thanks for watching. Bye bye until next time. Thank you very much.